All right, good afternoon, everybody. How are we doing today? As always, if I can just get a quick audio and video check, let me know that you can see my screen okay and that we're coming through loud and clear here. If I can just get that audio check, we can move forward here. Hope everybody's had a good trading week. Been a crazy week. We got some kind of, thank you, Robert. I appreciate that. We've got some rangy markets today that finally just broke out a little bit ago, and obviously a crazy market day yesterday with FOMC. And then we've got our holiday week next week. So we will see you after the holidays. So if you've been with us the last few weeks, we've kind of made a switch over to talking about binaries. We started with the basics, then talked about the different types of binaries that are out there. And today I'm going to talk to you about premium collection with Nadex binaries and kind of what that is. And we're going to be building on what we talked about last week when we went through the different types of binaries. I talked to you about in the money and at the money and out of the money binaries. And I'll show you where you can go and catch up on that webinar if you might have missed it last week. So welcome to the webinar. My name is John Skelton. I'm with apexinvesting.com. And the webinar is brought to us and hosted today by Nadex. We appreciate them having us. And let's get our disclosures knocked out so we can move forward. Trading futures options or any financial instrument involves risk, may not be suitable for every investor. And by the way, guys, any examples, anytime we're on a webinar and you see me using the Nadex demo platform, if you see me enter an order, that is in no way a recommendation, trading advice. That's me simply just helping you visualize what it is I'm trying to teach you that day, or visualize how to actually use the Nadex platform. As always, trading is your sole responsibility, and past performance not indicative of future results. So if you are brand new to Nadex, make sure that you hop on over to nadex.com. You can get some great information over here. Nadex offers right now in their live platform, they offer two different products. They offer binary options and call spreads. And currently in the demo platform and hopefully soon to be live, touch brackets. And you can go through these tabs here and get some information on, what each of those are all about. Today we're going to be talking about binary options. This webinar is being recorded, and all webinars are recorded. If you go right here to Learning Center and click Webinars, this will show you the upcoming webinars that you can get signed up for and get registered for and get reminder emails. If you have missed any webinars or want to watch this one again, right over here, see upcoming shows you what's coming up new. If you click on demand and then scroll right here and find me right here, John Skelton with Apex Investing. And this will give you, the past recordings. For example, like I said, if you missed last week, we talked about choosing the right binary for your strategy. We kind of went through all the different types of binaries. Before that, we kind of started with the basics of 101. We talked about some trading some different levels. You've got a wealth of information in here. A great place to, over the holiday weeks here, if you're wanting to, brush up on some webinars or, check out some free education, it's a great place to do that. Nadex does an amazing job about giving their members a ton of free tools, free education, free webinars. Another great tool you want to make sure to take advantage of under trading platforms, you can go right here to demo trading. If you don't have a demo account with Nadex, you're missing out. You can just fill out some quick info. Nadex will give you a free $25,000 demo account. So just fill out that info and you'll be able to sign in and check out the Nadex demo platform. Great place to get familiar with Nadex. Get familiar with the different products that they offer, the different expiration times and how everything works, entering and exiting orders. Just get familiar with it in the demo environment, before you're trying to figure out something with your live money, or any new strategies or systems. For example, the basic strategy I'm going to teach you today, which is more of a generalized strategy. Check it out in your demo account. Play with it with whatever strategy or system you're already using. Try it out in demo before you get over to live, okay? So again, a lot of props to Nadex for that. Like I said, I'm with apexinvesting.com. Nadex, has us come here to help you understand who and what is Nadex, how do the products work, what are some ways that you can incorporate them into your trading, and You know, at Apex, we're an online education company. We've got over 25,000 members. We have, you know, strategies and systems and live trade rooms, and we trade Nadex binaries every day and spreads every day. We're traders just like you. And that's what we're here to do, is just kind of, you know, share with you some of our knowledge, some of what we've learned from trading Nadex to help you with some do's and don'ts and avoid some pitfalls. And I've been with Apex now for about 5 years as head of operations. I've got a background in banking and as a licensed stockbroker. And like I said, I'm a trader just like you. I trade binaries and spreads every day here. So today's topic, we're going to talk about premium collection with Nadex binaries. We're talking about what does that mean? What is premium? How can you let time work in your favor? And how to choose the right binary for premium collection. Okay, and we'll talk a little bit about managing the trades. You know, we're not going to be going deep today at all into the basics of a binary. If you're brand new and you're not quite sure even what a binary is, you can, you know, check out the recorded webinar section there where I referred you to. The one thing I do want to just do a kind of very, very quick review of what we covered last week was the different types of binaries, because you have to make sure that you understand that before we can move forward with this. And let's just do a quick, real quick overview here. Okay, and just to make it simple, I'm going to go over here to forex. Let's pull up euro dollar. Let's check out 2 p.m. Okay. So this right here is called the strike ladder. Okay, this is where all of the different binary contracts are listed out. And each one of these, each binary contract has a strike price. Notice right here, it's 14.58, 54, 50, 46, and so on. They're 4 pips wide. See that? Each one of these is a binary option contract. And as we know, if we open one of these up, the ticket will open up. All a binary option contract is a statement. This particular statement says the euro dollar will be greater than 1.1438 at 2 o'clock. And that's it. That's all a binary option is. It's a statement saying the euro dollar will be greater than this at 2 o'clock. So it's binary. It's yes, no, 0, 1, true or false. Will this statement happen or will it not happen, right? And if we feel like that statement is going to happen, we might be interested in buying. Okay, the offer side is what we can buy it for. If we think that statement is false, we'd be looking to sell. Okay, at expiration, a binary is worth either 0 or 100. And I talked to you last week about, you know, for example, if we look at the offer side, what we can buy for. You notice it's down here at 15, 22, 30, 40, 50, 60, 70, 80. Going up towards 100. So if you imagine kind of a 0 up here and a 100 down here. Okay, so there's a lot of different contracts to choose from and a lot of different prices. And we talked last week about why these are different. Okay, and the one thing that we talked about was the 3 types of binaries. The first one was the at the money binary. And what does that mean? Well, notice this strike right here is 1442. Where's the market at right now? Where's the indicative at? 1442, now 1443. So the strike price is very close to where the market is right now. And we see that that binary was priced around $50. Okay. And I showed you examples of 1 hour out, 2 hours out, even days out. Okay. When the strike price is right close to where the market price is, okay, it's going to be priced right around $50. I mean, look at the market now. It's at 1444, which is right in between these 2 strikes here. See, it's right around 50 bucks. Okay, well, why is that? Well, at expiration, if a binary has to be worth either 0 or 100, okay, what's right in the middle between 0 and 100? Well, 50 bucks, right? So if we're saying that, you know, this statement, the market will be greater than this at expiration, well, if the strike is 1442 and the market's right there at 1442, it could go up a little bit and be worth 100. It could go down a little bit and be worth 0. So it's right on the fence, right? It's kind of 50-50. Does that make sense? That's why, you know, if it's right there about the same, they're going to be priced around 50 bucks. Okay. So if we were looking at that on a chart, on a euro dollar chart, you know, we could know, okay, you know, this is right where the market is. That binary right there is priced right at, you know, 50 bucks. Okay. So if I pulled over a euro dollar chart real quick, and we see right where the market is. So a binary right there is going to be priced right around 50 because it could go up and be worth 100, go down, be worth zeros. But it's right on the fence right now. Okay. We also talked about, so what do we know? Okay, let's look at a weekly that expires, you know, tomorrow, or something expires, you know, way later today at 7 o'clock or 3 o'clock. All right, 1440, 1446, right close to 50 bucks. Okay, so it doesn't matter whether you got, you know, 10 minutes or 10 hours or 5 days to expiration. If the strike and the indicative are right about the same, it's going to be priced right around 50 bucks. Now, what about this one way up here? That's okay. We also talked about binary pricing being a probability. Okay, meaning, you know, if I look at the buy side and the sell side, notice there's, you know, a few dollars difference there, kind of whatever's right in the middle. In this case, like about 62, 63. You can look at that as a probability from a pricing standpoint only of that binary expiring in the money. So when you're looking at something way down here at like 8 and 0, what's right in the middle? About 4 bucks, right? So about a 4% probability. Well, why is that? Why are these cheaper ones? We understand why these are priced at 50. Why are these cheaper ones so cheap? Well, because it's a lower probability. Because what are we saying? Where's the strike here? 1540. Okay. Well, where is 1540 in this particular example? I mean, it's way up here. See that? So we're saying for that one to expire in the money, the market's got to move way up, right? And it has to move up. It has to move way up. And it has to move all the way up in time before expiration. So that's a much lower probability, right? Can everybody understand that? Let me get some feedback here. Make sure you're following me. Do you understand why buying one right here where it's at, it's going to be about a 50-50 probability? Way up here is a much lower probability. That's why it's priced lower. That's why it's a lower risk. Does that make sense to everyone? Okay, so that's why it's priced down here closer to 0. Now, what about this one right here? That's priced at 72, okay? Well, where is that strike at? 1440, okay? Actually, let's go back to these here that are a little closer in time. Or this one right here, 1442, okay? Notice where it's priced at. Notice it's priced much, you know, it's priced above 50, right? Okay. So this one right here, I can buy, you know, for about 81, sell for about 71. So right in the middle is about 75. So I'm looking at about a 75% probability just based on the pricing, right? Well, why is that? Let's take a look at it live on the chart. Where's the strike? 1442 is the strike. Okay, 1442. Okay, so where's 1442 here? It's right here. See that? So I'm buying below the market. I'm buying below the market. So do you see why that's a much higher probability? Because the market's already above this. As long as it stays above this until expiration, then I'm looking at that binary, you know, expiring in the money, right? Okay. So what if the market goes up? If I bought this strike right here and the market went up, and then expired. Would this binary expire worth 0 or worth 100? Who can tell me? Yeah, it'd be profitable, expire worth 100, right? What if the market just sat right here where it is? It did not go up. It just sat right here where it is until expiration. Would this binary expire profitable? Yes. What if the market came, so I bought, what if the market came down and the market came all the way down to right here at 1444, 1441, 43 even, and expired right there? Well, it still expired greater than 1442. So it still would have expired profitable, worth 100, right? So remember, if we were to buy one way out here cheap, we only have one option. And our option is the market has to go up, it has to go up far, and it has to go up in time. Well, with this binary down here, the market can go up, the market can stay flat, it could even come down as long as it doesn't go to my strike. And it would still expire being worth $100. So everybody understand that about these here. We call these in the money binaries because they're already technically in the money. The statement's already true. Does that make sense? Any questions on that? So since the statement's already true, all we're looking to do is to just let time go by until expiration and have that strike stay, or have the market stay above that strike between now and expiration. And that's what we mean by collecting premium, okay? Because we can, the statement's already true, right? We can buy it for about 75 bucks, and we're just letting time go by for this to get to a value of $100. Okay? That's what we mean when we say collecting premium. Okay? So everybody understand that in a nutshell there. All right? It's kind of like an insurance analogy, meaning when you talk about premium or hear the word premium, what's the first thing that comes to your mind? What's something you pay every month a premium on? Well, your insurance, right? Whether it's your home insurance or your car insurance, you're used to paying for insurance, right? Well, and in a sense, when you buy one of these higher priced binaries, okay, you're paying a little more for it, but you're getting an edge. You're getting some insurance, right? You're not buying way up here at a low risk. You're not 50-50. You're down here with about a 75% probability. You're giving yourself some room for the market to make some little pullbacks. You're giving yourself an edge. You're giving yourself some insurance, okay? And but instead of paying premium, what you're trying to do is let time go by until expiration to get that $75 binary. You know, the closer you get to expiration, it's going to go up in value and get closer to 100, right? So that's what we mean when we say premium collection. It's about having an edge and then letting time work in your favor, okay? And it's called, you know, and time decay, meaning the closer, if the market's already above the strike, so the binary is already in the money, we're just wanting time to work in our favor, okay, and get us closer to the value of $100. All right. Any questions on that in general? If I lost anybody right there, go ahead and speak up now before we move on, because it's very important that you understand the concept of what we're talking about here. Okay. So it's very important to understand those, you know, lower risk out of the money binaries way up here. You're not putting time in your favor. Time's against you because it has to move all the way up there before expiration. It has to move up. It has to move far. It has to move fast. It has to move in time. So time's kind of working against you, right? Here, right where the market is, about 50-50, you know, it's kind of 50-50, right? When you can get something that's, you know, down here somewhere, okay, you're putting some time in your favor and you've got more options. The market can go up. The market can stay flat. The market could even come down as long as it doesn't come all the way down. You've got more options there, okay? So Eric says, so basically we're making a couple bucks safely with the time decay. Well, Eric, thanks for setting me up, buddy. That's kind of the next thing we're gonna talk about here. Okay, so so everybody understands, because there's two sides of the coin here. Everybody understands the power of that, right? Everybody understands the power of having that room, having that edge, having that insurance. Okay. Also, from a trading standpoint, if we can look at binary pricing, okay, let me just look at something here. Let's come down a little further. Give me just a second here. The market's kind of moving. So these real cheap ones are gone now because the market's moving. But remember when we were looking up here and there was like $7? Let me find a different example real quick here because I want you to visualize this. Okay. So from a trading standpoint, if we know that we can average these two prices, say this is 80, this is 90, so right in the middle is about 85, right? This is 0, this is 7, so about 3, okay? This one here, about 75. So from a trading standpoint, a statistical standpoint, do you prefer to trade with something that, with an instrument and a contract that from a pricing standpoint only, okay, again, the pricing model doesn't take into account what's happening with the market or where it's turning or where it's gonna be, it's all about where it is right now. Do you prefer to trade an instrument or a contract with a 3% probability, 50% probability, or a 75% probability? Just from a statistics number. Well, I think that's a pretty easy answer, right? We all much prefer the 75% probability, right? Anybody disagree with that from a probability standpoint? Well, we all like that, okay? Now, what do we like about the 50-50? What do we like about the at the monies of, well, I can risk 50 to make 50, right? Well, let's talk a little bit about something here. So I think we all agree that we all much prefer something with a 75% probability, right? That's a pretty easy answer. What do we not like? We don't like this. We don't like risking 74 to only make 26. Agreed? Like, we like the one side. We like giving the room, the insurance, the edge. We like the high probability. But what we don't like is that right there. We don't like our risk to reward ratio. Everybody agree? Because what happens if you're risking 75 to make 25? Well, one loss, how many profitable trades does it take to make up just one loss? It'll take you 3 trades, right? So we're all on the same page here. We all love 75% probability. We don't like our risk to reward ratio. Agreed? Any comments, questions, or input, disagreements, anything on that? Any feedback on that? I think we all understand that, right? So let's talk a little bit about, this is going to be very basic here. So let's talk a little bit about the at the money binaries. Okay? what do we like about the at-the-money binaries? Well, we're basically risking 50, and if the binary expires worth 100, okay, you know, if it expires worth 100, right, then we could profit 50, right? Everybody agrees? You know, or if we lose, then, you know, we're down 50. Agreed? So, if we were trading at the money binaries, and we could then get what's called a 1-to-1 risk to reward ratio. Everybody understand? We're risking 50 to potentially make 50. It's a 1-to-1 ratio. Now, what we're talking about over here, we like, for example, the 75% probability, but we don't like risking 75 to only profit 25. Agreed? So if we're in a 1-to-1 risk reward ratio, back over here, we're risking 50 to make 50. What happens if we're only profitable 50% of the time? We're only right half the time. So out of 10 trades, we lost 5, lost 50 each time. And then we were profitable in 5, made 50 each time. So we only were right 50% of the time. Where are we at as far as profit or loss? We're at break even, right? So, okay, yeah, minus fees and all that, but break even. So what if we could have a 1-to-1 risk reward ratio, okay? But we can change that probability or change our, you know, being right, how many times we're right, to 70%. So we're right, you know, and let's just use this at the money, you know. So 7 times we profit $50. So we're up 350. 3 times we're wrong, so we lost 150. Well, now we're up in the end $200 as opposed to being at break even. Everybody follow me here? Am I losing anybody? Pretty simple math, right? If we're at 1-to-1 and we're about 50, right? You know, we risk 50 to make 50. We're only right half the time, we break even. So then what do we need to do there? Well, we need to raise our, well, we could change our risk to reward ratio where we only want to risk 20 to make 80, but we know that that's a very low probability, right? So what's the other thing we'd want to do? Well, how can we raise, you know, 50% up to like 70%? Well, yes, obviously we want to have, you know, a good system and, you know, a good strategy, you know, good charts, we want to have a good system, okay, that if I follow the system rules, I usually have greater than a 50% rate of being right, correct? I mean, if we're at a 1-to-1 ratio, what puts us from break even to profit is being right more than 50% of the time, okay? So yes, our first step is having a good strategy and a good system that is right more than 50% of the time. Agreed? It's the first place to start. But also, what if we could add to this utilizing the 75% probability binaries, right? Because again, we understand that, right? We understand that the low risk way up here is very low probability. We understand that right here, we're at a 1-to-1 probability, but you know, which way is it going to go? We like, so what if we could combine a good strategy and system that has 70+%, you know, rate of being right, and combine that with in the money binaries that give us an edge as well and give us room and a 75% probability as well. Can you see the power of all that? Can you see the power of a good system and the 75% probability of these? But we're still lacking something. What do we not have with this binary? We don't have a 1-to-1 risk-reward ratio, do we? We're risking 75 to only make 25, right? Okay. So let me ask you a question. Let's say that our strategy, our system says the market is still going long, and we were able to get a binary down here at $75 to buy it. The market can go up, the market can stay right in here, or the market could even come down, but as long as it doesn't hit our strike, we're still good, right? Okay. So if we bought that binary for $75, what is the most that it can be worth at expiration? Who can tell me? What is the most that we can make off of that binary if we're right? We buy it for 75. At expiration, we were right. What's the most it can be worth? Yeah, Kenneth, exactly. The most it can be worth is $100. So the most we can profit on it is what? $25. Okay? So again, we don't like risking 75 to only make 25. Okay? But what do we love about this? We love the 75% probability. So let's talk about something here. Any strategy or system that you have that, you know, gives you an entry, gives you a direction, your strategy or system should also have what? What should it have in it if you're wrong and the market goes the other way? You should have a stop or an exit, a manual stop, a manual exit built into your strategy, right? Hey, I think it's going up, so I bought. I was wrong, it went down, I get out. Correct? Every system should have that, right? So let me ask you a question. If we bought this right here at $75, market goes up, great. Stays where it is, great. Comes down and expires right here, great. What happens though? I'm not talking about at expiration. I'm talking about between now and expiration. If the market comes all the way down and hits this price, our strike price, remember the strike price was $14.42. I bought it for $75, right? If the market comes down and it hits this price, so the market price and my strike price are right at the same before expiration. The market price and the strike price are the same. Where do you think that binary is going to be priced at? We talked about it earlier. We looked at examples last week as well. Whether you've got 10 minutes, 1 hour, 2 hours, or 5 days till expiration. When the market price and a strike price are right at the same, what is that binary going to be priced at? Right around what? $50, right? Just like right now. Where would a binary right here be? Right where the market is now. Where would a binary right there be priced at? About $50, because when the strike and the price are the same, at expiration it's got to be 0 or 100. So right now it's right on the fence. So it's priced where? Right at $50. Everybody understand that? So right now I buy this for 75. But if the market comes down and hits that, that would be worth about $50. Does everybody follow me there? If there's any questions or confusion on that, stop me now. Say something now. Everybody understand? So, what could a strategy be? I have a good strategy or system telling me this is going long. I'm going to buy a $75 binary to give myself room. The market can go up, it can tweeter around, it can pull back. But if it comes down and hits my strike, I'm going to say, okay, I'm getting out now. And I'm going to manually exit the trade now. At what price approximately would you be exiting the trade and getting out? Just say, hey, I was wrong. It pulled back all the way to my strike. I'm getting out. What price would you be getting out at? What value would you be getting out at? Who can tell me? How much is that binary worth? Yeah, Devin, exactly. $50. Okay, so now let's relook at this. I'm using that $75 binary so that I have my good system, my good strategy, and I'm taking advantage of a binary with a 75% probability. Okay, so if I buy for 75, the most it could be worth is 100. So the most that I could profit is 25. But if the market comes down and hits my strike and I exit for 50, how much am I losing? $25. Everybody understand? If I buy for 75, it goes against me and I get out at 50, I'm down $25. So what did I just make right there? What did I just create using that strategy? I can either make 25 or I could lose 25. I'm now what? At a 1-to-1 risk-reward ratio. Does that make sense? Just like what we talked about up here. I'm risking 25. If that's my rule, I'm getting out if it hits the strike. Then the most I can make is 25. The most I can lose is 25, approximately, right? So I'm now at a 1-to-1 risk-reward ratio, risking 25 to make 25. But what am I doing? Remember we talked about if you only are right half the time, you're break even. So how are some ways to get you being right from half the time up to like 70, 75% of the time? Well, yes, having a good strategy and system, but you're able to now utilize the power of that 75% probability binary, but not risk 75 to only make 25. You can create a 1-to-1 risk-reward ratio, but utilize the probability of the 75% probability binary if you exit. Does that make sense? Did I lose anybody right there? Any questions there? Any input there? Because what do we know? Again, we know whether we're an hour or days out to expiration, when the strike price and the market price are together, it's going to be worth about $50. And that's what we can use as an exit. Okay. Eric says, so it's just up to us to hold just in case it's just a pullback to continuation. How do I create a 2-1 ratio with the same velocity? Yeah, Eric, I mean, yes, just like any trade, it could pull back and you get out and then go back up, just like any trade in the world can do. That's why you also have stop losses. Any system you have, if you think the market's going up, but it starts to come against you, if you just hold it and hold it and hold it and say, oh, it'll come back and hold it and hold it, you're just lose and lose and lose. You have to get out somewhere, right? Okay, doesn't mean if it pulls back and then goes back, you can't get in another trade. But you always have to have an exit point. You know what I mean? You have to have an exit point. The other Eric says, how do I create a 2-to-1 ratio with the same philosophy? Well, there's not necessarily a way to do that within the money binaries. Okay. You know, if you, you know, to create, at least not with this, there's no way to do that within the money binaries unless you're exiting a lot early, meaning, okay, I bought it for 75, I can make 25. So if it goes down $12 in price, I'm going to get out. Well, you don't want to do that because that's going to knock you out a lot. That's part of the reason you're waiting to, you want to give yourself this room. See, if the market's up here and it pulls back a little bit, it might go down $12 really quick. But you know when it gets to here, it'll be around 50. Okay? So that's what, you know, you really have to look at out of the money binaries to create more of that. Okay? Kenneth says, but you have 50% if you buy the strike price. I'm not quite sure what you mean by that, Kenneth. Maybe you can expound on that. Not quite sure what you were getting at there. Yeah, are you saying if you buy like where the market is right now, like the at the money, then yeah, it's a 50-50. You know, here it's a 75% probability. But if you exit here, you're still at a 1-to-1 risk-reward ratio. Doesn't mean that you can't start off with one contract, and as your account builds, you do 2 contracts, 3 contracts. Just because it's $25, you might be doing 10 contracts, and it's $250 of profit. You know what I mean? So you've got to look at the percentage and the ratios, not the dollar amount there. Okay. So does everybody understand that concept there? Okay. Yeah, Eric says, oh, that makes the in the money more attractive now. Yeah, absolutely. Because what do we not like about in the money binaries? Well, you don't like the fear factor. You don't want to click on this and say, okay, maybe I want to buy this. Oh, max lost $71. Because with a binary, again, it's a statement. The market's going to expire above here. It only takes one tick, you know, for you to be wrong. And you don't like the feeling of in one single tick, I could be down a maximum of $71 to only make 28. You don't like that. What your emotions like is this down here of, oh, I only got to risk $7 and I can make 92. Hey, I love that, right? We all love that. But again, where's the market at? It's down here at 78.98. You're saying it's got to go way up to 79.26. Like it's a lower probability. Okay, does that make sense? I mean, yeah, exactly, Eric. Like you'll just, with these low probability trades, you're just going to slowly I mean, look at the numbers. Okay. Oh, look, I can buy this for about $10, right? Oh, I can buy it for about $10 and I'll make 90. Okay, what's the probability here? Probability is that you're only going to be right maybe 1 out of 10 times. So after 10 trades, where are you? Did you make anything? Well, I made 90 on that one. Yeah, and then you lost 10 and 10 and 10, 9 times. You know what I'm saying? So now, don't get me wrong. There are times to use these lower price binaries. We do it all the time, but it's got to be when bigger moves are expected. You have to do it right. Okay. So the in the money binaries, we love the probability. We love giving ourselves this extra room. We just don't like the risk reward. But when you know that that's how options work, is when the strike and the market are the same, it's about 50, you can use that to your advantage of saying, hey, that's my exit. So I want to get in, where I can make about 25, or if I'm wrong and it comes down to the strike, I'll get out and be down 25. You're creating a 1-to-1 risk reward ratio, okay? But utilizing the higher probability, 75% probability binary. Make sense? Okay? So, what I suggest to you is test this out. All right? Whatever strategy or system that you're already using, maybe you normally trade spreads, or maybe you normally trade out of the money binary, whatever it may be. Go ahead and throw these in try some in the money binaries in your demo account. All right? And utilize that rule. Okay? And utilize that rule of exiting at the strike. Now, let me tell you what's going to happen. You're going to reward yourself for bad behavior, because the market's coming down and it hits the strike and you're supposed to get out. But you don't. You're like, well, it's coming down a little more. I'm going to leave it open. Oh, look, it came back. Ha ha. Ooh, I'm going to do that every time. Okay, that one single time that it worked out for you and you made 25 bucks. And the next time you do it, oh, I'm going to wait, and oh, you lost 75. Now you got to have 3 more winning, profitable trades to make up that one loss. Do not reward yourself for bad behavior. If you're going to do this strategy, you have to follow the rules. The only thing that makes this strategy work at a 1-to-1 is if you exit. Do you hear what I'm saying? You understand? And I'm speaking to you from personal experience. I've done it before. I have a gut feeling it's going to come back. Oh, boy. You want to talk about heart racing, right? Don't do this strategy if you're not going to follow the rules and get out. Okay? One other misconception about this strategy, that almost every webinar, somebody that I've ever taught this, somebody says, oh, wow, you just opened my eyes. We always know that the strike will be at 50 if it gets there. And I totally get where you're coming from about the in the money higher probability binaries. So why don't I just raise my probability even more and get this $90 one? Because now I've got a 90% probability or 85% probability instead of 70. Hey, who doesn't like that, right? I mean, when you're talking about some new strategy or system, what's one of the first things you always ask? Well, what's your rate? What's your success rate? Oh, 70%. What's yours? 85 or 90. Ooh, I like that one. Right? That's where your head jumps to of, well, let's just go deeper in the money and, instead of getting, this strike here, let's get even further down here. Let's buy ourselves some more room. That's awesome. Right? Well, but hold on. Because what did you just do? Where are you going to exit? Because if you're buying for 90, the most you can make is 10. And if you're going to exit at the strike at 50, you're now losing 40. You see what you just did to your risk-reward ratio? You totally threw it off. You're risking 90, you're risking 40 to make 10. Is that a good risk-reward ratio? just because now you're at 90%? Does that make sense? So that's why you don't want to go up into the 90s. Yes, you're raising your probability of being right, but when you're wrong, if you were wrong once and you're down 40, how many trades do you have to be right on to just get back to break even on that one trade? 4 trades. It'll take 4 trades to just break even from one loss. But if you can get in, you know, approximately 75. Guys, this might be 70s, might be 72, might be 78. You know what I'm saying? I'm not telling you don't take the trade if it's not right at 75.00, you know. But if you can get in at 75 and you can either, you know, make 25 or, you know, lose 25, it's a 1-to-1 risk-reward ratio. If you lose one, it only takes being right on one to get back to break even. So do you understand those 2 pitfalls to this strategy? Don't go way up into the 90s, and do not hold it past your strike. Exit at the strike. Make sense? Okay. Let's see here. Robert says, not automatic. Yes, you must exit manually. Okay. So what does that mean? Well, you know, let's just take a peek here. Let's say that we had bought this one right here in demo. Again, this is just a demo example. Let's say that, you know, we had bought this one right here. Okay. So, you know, we got in and we bought it. Okay. Bought it for about 78 bucks. All right. And the way that you exit an order, so see it says +1, that means we bought it. It's in our open positions here. It's an open live trade. If we want to get out of it, well, what we do is just click it. A ticket automatically opens up, already marked sell. Okay. And if you have it on market order, you just click place order and it sells it back. Okay. So, what you would be, you know, what you want to do is if you had bought this contract and, you know, you're watching the chart and it's getting, you know, it's getting right down there to it, you know, it's getting close to it, then what you'd want to do is you know, you'd want to have, you know, if you're getting close to it, you'd want to click this and you'd want to have this open and have your finger on the button. Okay. And if you see this price right here, you know, become the same price as that, you want to get out. You know, you want to click it and get out. Okay. So yeah, the market can fly past something. Absolutely, Eric. I mean, that can happen, you know, but that's how you'd want to do it, is to make sure to have it ready to go. Just like you would on any other strategy or system, having a stop in place or a manual stop ready to get out. Hey, if I'm wrong, and it goes against me a certain amount, I want to get out, you know? Okay. Yeah, Eric, exactly. Yep. If you would have sold, for example, let's say we had sold here instead of bought. See, when you sell, it'll say -1. Okay. See that, Eric? And if you want to get out of a sold contract, when you click it here, ticket pops up already marked buy. Okay, and you can get out of it because it knows, okay, look, you know, Eric's in this order. If he's trying to get out of the order, well, it's a sell. The only way he can get out of it is to buy, right, Eric? So that's why it knows when you click on that sell, it automatically just says buy for you to, boom, get out. Okay. Just, you can do a working order for a take profit order, but not for an exit. Okay. So, Robert says, I tried this last night after 12. I broke even, didn't know the concepts of now. Okay. Well, hopefully, you know, hopefully, Robert, this can help you here. All right. And try it out where? In demo. Play with this in demo. Okay. Until you get the hang of it. Okay. Don't just jump right into, live money, with this new strategy or system. Play with it and play with it in demo and see how it works for you. All right, and you'll see that there's times where, in the money binaries work better than others. Okay, but you have to know your strategy and your system. You got to understand the market conditions. All right, I mean, if the market is zigzagging, let me look here. If it's not a clear trending day, the market's just zigzagging up and down, and it's just shooting up and down, shooting back and forth. Okay, well, that might not be the time when you're wanting to do a strategy like that. You know what I mean? You might want to do it on more smaller range bound days where, if the market is chopping, you can get a strike underneath all the chop. Or you might want to utilize it if you have, some kind of trend trading strategy. Okay? I mean, some people have, some people have trend trading strategies, right? Where they're looking to trade a trend and, they're looking at the downtrend and they want to sell on the pullbacks, right? Well, maybe utilize them and check them out. When you get your pullback entry and then it starts to go down, well, look and see. Are there, it pulled back and now I'm looking to go short again. Are there strikes available up here above that previous high that you can just ride out as the market goes down to the next expiration? Play with it and see how it works out for you with your particular strategy or system. Okay? All right, guys. Well, I hope this helps. I hope this kind of opens your eyes up to, some different potential ways to trade the in-the-money binaries. I know several of you have said, oh, I never look at those. I've discounted all these because I don't like the risk. Okay? And this shows you a whole new way to combine the high probability binaries with a good risk-reward ratio and have some set rules for that strategy. Okay? So guys, once again, hop on over to nadex.com and visit the Learning Center. Go to webinars. Upcoming, you get signed up for any upcoming webinars. If you want to check out this webinar again, or the recording will be placed here under On Demand. Scroll down and find me right here, John Skelton. Give it till later today or tomorrow for the recording to be up. You can go and check out any past webinars as well. In these recordings, we talk a lot about different strategies, different systems. Also, if you want to learn more, feel free to hop on over and visit us at apexinvesting.com. We've got a lot of free education information over there, information on some of these strategies and systems that we use as well. Let's see here. Yeah, RD, hit us up over at Apex. We can help you with some of that as far as setting up, the Ninja Trader platform. But yeah, feel free to visit us there. All right, guys, listen, thanks so much for joining us today. Try this out in demo. I hope all of you have a great holiday week. I want to wish you an early Merry Christmas here. Hope you all have a great holiday with family and very safe and joyous time. And we will talk to you soon. Thanks so much, guys. Have a great afternoon.